Hello guys, welcome back to my YouTube channel. In this video, I'm going to be breaking down a tactic that we use within our trading that allows us to maximize on our winners whilst also limiting our risk exposure. Make sure you stay to the end because we have a special announcement, but for now, let's get straight into the video.
Okay guys, so the first thing we're going to be doing is analyzing the chart, putting on our analysis to basically understand the bias, whether we want to be buying or selling this market. So we're going to start off just by understanding market structure. We can clearly see that price is uptrending, forming higher highs and higher lows. So it's clear to see that buyers are clearly dominating this market and we're in an uptrend, and we can also visually represent this by drawing on our trend line, connecting the low points, and then we can also copy and paste this to visually represent that we are trading within an ascending channel. So price is trading within an ascending channel and buyers are predominantly in charge of the market right now. We're forming higher highs and higher lows. However, as you can see, this is our most recent higher low point, and then this is our most recent higher high point. Now, notice here in the market how price tries to form a higher high. However, looking at the candlesticks that we've produced, huge wicks to the upside, that is showing us that there is a wick rejection. There is rejection which is being intercepted by sellers who are driving price down. So this to me is a false breakout and almost like a double top. So price has created this resistance. So that's our first initial sign that sellers are stepping into the market right there. Now all we need to confirm this is for our most recent higher low point to be broken, which is this level here. Once this is broken, that is our confirmation, and we can see down here that that has now been confirmed, meaning price has broken out of the ascending channel, and we've also broken market structure. We shifted from bullish market structure forming higher highs and higher lows, as we have now formed a lower low in the market. We can anticipate that price will now form a lower high and continue to the downside. So where are we going to enter the market, and where are we going to target, and where would most people put their stops and their take profit level? So myself, I would be targeting the low point from when the uptrend started. So down here would be where I would be targeting for my sell positions. I would enter here, reason being, we have formed almost like a double top within the market here. So let's just say that price and traders would enter off of this double top, put in their stops above and target down here. So normally this would be the normal position that people would take. It's a good risk to reward, don't get me wrong. But what a lot of traders would tell you to do is to just enter your position and then let it run to take profit, when this is further from the truth.
Most people, when trading, will cut their losses short, but they won't maximize on their winners. When we're right, we want to be right big. I hear a lot of people talking about entering a trade and forgetting about it until either their SL or take profit has been hit, when in my opinion, this is not the right thing to do. What really builds a successful trader is their ability to manage the trade after they enter in a systematic and calculated way. Trade management involves trailing stop losses, taking partials, closing the trade early, scaling into winning trades, or even just doing nothing. In the following example, we're going to be focusing on scaling into winning trades.
Okay guys, so now I'm going to be breaking down how we can look to scale in to further trades to help maximize on our winners whilst also limiting our risk exposure that we have throughout the trade. Now I've got this up here, you can see I've got risk and reward, and we're going to keep a track of this whilst we're trading. And I also advise you guys to do this when you're trading as well, to constantly keep a track of what your worst case scenario is, so your risk, to what your best case scenario is, so your reward. In this scenario, we are risking 1% to make 9%. So we have a -1 and a +9. So what we're going to do is look how we can scale into positions. And remember, the management of the trade is key. We're going to be keeping an eye on the trade to look if we can scale into another trade on the way down. So we'll play out price and see how we go. So as you can see, price is moving to the downside, and what price is doing is we're forming structure now. So price is going to impulse. So it's very rare that price will just continue all the way down without forming structure. It can happen, but it's very unlikely. And this is why we manage our positions, right? Because anything can happen throughout the trade. It's what happens after you enter that really matters, where you can look to, to get into more trades, take profits, and so on and so forth. But as you can see, we've had a nice impulse away, and price is pulling back, correcting itself, forming a potential another lower high within the market. So let's play it out. Okay, so as you can see, price formed another double top, and we'll draw in some analysis here. We can see clearly that price has retested previous support in the market here, and it's used it as a resistance, and we formed a nice double top, and we had a nice rejection there. Another thing we can add to this analysis as well, which I like to use, is the Fibonacci tool. We can do from swing high, connect it to our swing low point, and you can see that price has pulled back to the 61.8%, which is a brilliant golden zone for price to pull back to. So that for me is a nice entry in the market. So why wouldn't we take it? So let's say we did enter our trade here, and I'm going to clean this up for you guys as well. Let's move that to there. And let's say we enter another position and we put our stops just above, and then we're going to target the same place. So our targets are going to be in the same place there. Now, how are we going to limit our risk here? So we've now entered another trade, meaning we have another 1 to 9 on the table, meaning we're actually going to be risking now a potential -2 to make +18. So this isn't very lucrative because it's the same thing. A 1 to and a 9 or a -2 to 18. It's pretty much the same, right? But how can we limit our risk exposure on the table? What can we change to make sure that we're limiting our risk? Well, the first thing we can do is trail our stop loss to break even potentially, or even into profit on our first trade. We're now in nice profits, so we can potentially trail our stop loss into profit. Let's say just above here, where our stop loss is going to be for that trade, and that's going to be a 1 to 1. So now we know if we enter this second trade, if this pulls up and hits our stop loss, so let me put on an arrow here. If this doesn't go our way and it pulls up, hits our stop loss, what does this mean? Well, we're going to have a -1 from this trade, but if we trail our stops to a +1 here, it's actually going to cancel out, and it's actually going to be 0. So if we do that, it's very lucrative, because then we can change our risk. It's nothing, meaning worst case scenario, we're going to come out with break even, nothing. However, our reward is still +18 because we're down here. So that already has basically doubled our reward, and we're now limiting our risk. Our risk is now turned to 0 rather than -1. So notice just by entering another trade, you can actually increase your reward massively whilst also limiting your risk that you have on the table. So let's keep price going, see what happens. Let me play this out. Let me delete this. Play price out, see what happens. Price moves to the downside, keeps going. Again, we're just continuously forming structure within the market. Okay, now what does price do? Price has now formed another piece of structure. Once again, retesting previous levels in the market, previous support, and it's using it as resistance. Previous support, and it's using it now as a resistance. We could even say potentially that is like the head. We've got the left shoulder here, and we now come up and form the right shoulder. So once again, if you're seeing this happen, you're in that first trade, why would you not want to enter more positions? Price is creating structure. You know where your target is. You know where you're expecting price to move to. So why would you not try and maximize on the way down and add to your position? So let's see how we can do it. So we have a nice bearish engulfing candle there. We enter our position, we put stops above the high again. This is a nice risk to reward of around a 1 to 4. So what is our risk to reward now? So let's work it all out. We have +9, plus 9, 18 still. Now this could be a potential plus 4, but now we need to work out our risk. So our potential reward now is plus 22. So let's put that in. However, if this doesn't work out, if this trade here doesn't work out and it hits our stop loss, we need to work out worst case scenarios. We always have to consider the risk before the reward. So what is the worst case scenario here? So that's going to be a -1, but then this trade that we're in here would get out for a +2 because we can trail our stops to where this stop loss is. So let's say we trail that to there, we would close this position, and our first trade would be at a +3. Let's say a +3. We'd move it to a +3. So worst case scenario, -1, but then we have +2, which is +1, and then we have a +3, which is a +4. So our risk is now positive. So our risk is now +4. We've managed to actually massively increase our reward whilst not only limiting our risk, but making our risk positive because we've scaled into positions. We've scaled into positions, which is basically given us a cushion to allow us to enter more trades. We're allowing ourselves to enter more trades because we have this cushion. So scaling into trades can actually help us to make our risk positive. And that is why we do it. So that's going down here. That's down here. We're still in all these trades. So remember, this is obviously just a very good example. Price could pull back, but this is just showing us even if price was to pull back now, we can go on and we can go on and we can go on. It's all about making these decisions when you're trading and managing your positions whilst you're trading, because now, rather than just coming out with a +9 and your risk was -1, you're now coming out with a +22 potentially, and worst case scenario, your risk is a +4. So let's play our price and see what happens in this scenario. Okay, again, so we hit our take profit. So all in all, very, very good trade. And that is the reason why we scale into our positions. So again, this isn't going to happen every single time. Your scale in positions will lose, but just remember, you want to be managing your positions accordingly. Even this trade here, you might want to move your stop loss to break even at some point. Then this doesn't come a +4, it actually becomes a +5. So on and so forth. And then as you're trailing your stop loss into profit, you might be trailing it with structure. You might put it here. This will keep increasing. That is the whole point. The whole point, whilst you're maximizing your profits, maximizing your winning trades, is to decrease your risk that's on the table at the same time. And by scaling into trades and maximizing on your winners, you can also limit your risk exposure on the table as well. So that is a breakdown of how we would scale into secondary positions to maximize our winning trades as much as possible, whilst also limiting our risk exposure throughout our trading.
Right, so special announcement, our Academy course is finally out. And if you're lucky enough to be watching this video at the time of release, we actually have a 50% off sale. Included in this course, you get a complete A to Z on exactly how we trade. As well as this, you get 3 live calls a week with myself and Ryan breaking down the markets with one-on-one support. Once you've completed the course, you will also be provided with a complimentary 25k funded account challenge at our prop firm where you can put your skills to the test. Our aim is to build traders within Vanquish where you can also have the opportunity to come down and trade in-house on our trading floor. So if you're interested, simply message me or go to the link in my bio in my Instagram. If you enjoyed the video or found it helpful, make sure to drop a like and leave a comment in the comment section below. Let me know your thoughts. But for now, take care and see you in the next video.